Evolution of a trader. In order to become a better trader is not only about understanding the setups, the price action, the volume, but it's a project, it's a plan that you develop every single day and you work for it. Remember that the best traders took time to become good traders, and so you will. What I suggest always to do is after your trading day, review your trading, like have a report. Fill it out every day. A report that can measure your performance from the point of view technically and also mentally discipline. Also try to have besides the report card, also a performance card where you give yourself a score. For example, were you patient? Were you fighting the trade? Were you over trading? And you can give a score. So at the end of the day, you will see that score. End of the week, you will have a score. End of the year, you will have this score. And then you can measure also from month to month if you're improving or not. It's very important to journaling or keeping a blog, have a list of all your trades, and also tracking the setup that you're trading. Because, for example, everything that we trade in the room is based on statistics. Remember, trading is always a probabilistic game. And in order to be successful, you have to have the probabilities on your side.
Hey, this is Jay. I'm taking a quick moment today to explain you on how to set up your elite trading account with Zimtra. This isn't a simple account, but I've put together the best trading advantages for day traders. First of all, up to 20 buying power, up to $1,000 in starting credits, and also free ECN routes. I've also put together some exclusive perks like 3 months of mentorship included directly with me, 50% off of private education, and also free access to small cap room once you exceed 2 million in volume traded. Well, click the link in the description and set up your trading account.
The end of day process, as we said, is one of the most important factors in becoming a good trader. This is my day trading reality checklist, the one that I share with students that I'm personally coaching my mentoring plan. The first part is where we're going to analyze the money management. For example, your profit expectations are too high for your account size. And you can see over here, we can give us yes or no. So a result for every single day of the week. Your daily goal is unrealistic or difficult to achieve. You struggle to accept a losing trade or a red day. So everything about money management. You can read also over here all the questions I have. Then the second part is also risk management, but in this case it's about risk, losing trades, average down your position, double down, so how you manage your trading position. Third part is about executions. So you go, for example, into trade without a basic plan, you copy out the traders, your losing trades are larger than your winning trades, you trade against the trend, you exit the winning trades too soon. This is often an error that I see in traders which are, I would say, who are still not successful. And then there's a part which, don't underestimate this, but the part about emotional regulation is so important, because you will see that you can learn actually very good a strategy in 2, 3, 4, 5, 6 months, right? You'll learn price action, order flow, tape reading, how to analyze a chart in not many months. But this is the part that it's harder to accomplish, because you have to work on yourself. And remember, it's just like for every athlete, when they try to improve not only their skills in their field, let's say a basketball or MMA fighter, but they also have, a nutrition coach, a mental coach, a discipline coach, so other coaches that help them, right, in other sphere or of their life. In this case, the emotional regulation talks about really your emotions, like your trading decisions are based on fundamentals or hype or hope. You get nervous. You let emotion dictate your trading, so you simply step away from a systematic process And then when you become emotional, you're going to do many errors. You try to predict, you get FOMO, so fear of missing out an opportunity. And then there's the part of psychology. So you have very little to no self-control and or lack of discipline. You're advanced trading. You tend to retrade. You hesitate. You think about being wrong, so you have doubts. And when you have all these results, at the end of the week, you can really see what you have to work on. That's the most important thing. All of this is because it's like a mirror that reflects your trading level. And then you have to work, for example, on yourself, I believe better with a mentor that will help you to improve those fields. At the end of here, we can see the results of money management, risk management, execution and management, emotional regulation, psychology, and mindset. Then there's the part of tracking, and there are many ways to do it, and I would say to distinguish, there's a part which can be totally automatic. So you can work with the coder. If you need help, just reach out. And I'm not a coder myself, but I can really refer you to some good coders. And or you simply do the longer version, which is every single day, have an Excel sheet and simply fill it out. In this case, we have a trader. This is an example of a trader on Tesla. The trader trades mainly stocks. And the work of this trader was to see how the setups that the trader trades, how they perform in the entire year of 2023 and then 2024. So having results after of performance, profit factor, win rate, drawdown, and so on. In this way, we have a systematic process that will simply tell you, based on data, on evidence, how many times the setup will work or won't work. And also, which are the best scenarios for the stock. Just to make an example over here, we have Tesla. We can reference to the first one. The daily trend is bearish or bullish, and this is based to where we put the J lines. The hourly trend is bearish, bullish, or sideways. Price is above or below the hourly J lines. The pre-market volume, the previous day close, the open level, it's a gap down, gap up, the gap percentage, opening setup, intraday setup. And then we can go over here to the right side and we'll see more parameters, right? So you will see it's inside PDR, previous day range, which setup we had, an FFT, so that's a pop and fail. Setup details means the timing of entry. The game plan was bearish. Then how we had the 90-MA, the J lines, with other signals we had in confluence, right? And all of this, as I said, to give you an edge. Because when we have that data, tangible data, that our setup is, for example, working 50, 60, 70, and some of the setup that I work with seems like incredible, they have 80% win rate, then I simply have this way of saying, load the boat in those scenarios, A+ setups, because I can simply size on that because I have evidence of data.